Hey folks, welcome to the Pipnotic Symposium for the 26th of July 2019. Today we're going to talk about commodities and FX correlations. Okay, the agenda for today is this. We have a quick Pipnotic update. We're going to have a look at some common commodities, correlations between commodities and currency pairs, or rather currencies and currency pairs. Then we're going to touch very briefly upon interest rates. Then we're going to dive into the charts. So a quick update from Pipnotic. And the main update here is the Discord channel. There's another one I'll add there. And I have updated the structure of the Discord channel. And now it looks like this. Okay, so we have Pipnotic, which is the main category. Then we have members, which is member-related information. And the permissions on everything is that everyone can see it. Okay, I don't want to sit there and fiddle around with this person has access to that. I don't want to do that. And so all premium content will be delivered via the Pipnotic website, and all public content and information will be distributed via the Discord channel. And so here are the rules here and the channels that currently exist, and a little bit about what we do and don't do at Pipnotic on this channel. Here we have a channel that will be related to people who are looking to join the Pipnotic community. We have the welcome message, which you can see here, which kind of shows where everything is. We have some announcements if anything is noteworthy and needs pushing out to everyone, then it'll be done here. And then we have the general discussion, which we all know and use, and then we have the other stuff that's located down here. Okay, and so I encourage everybody, if you don't already have access to Discord, to do it, to get access to it. It's very easy to use. You can run it in the web browser. You don't have to run it as a desktop application. You can run it from a smartphone. It's just a really nice way to engage other people or the members. We have a lot of members in there. We have many members in the chat room. I think collectively we have maybe close to 400 or 500 people there, and we have some really interesting people lurking around in the shadows. I'm not going to mention any names, but we have some people in our fold that are multimillionaires trading multi-million-dollar accounts, and so there's a lot of really exciting people in there lurking around. So check out a question and see who responds. Maybe one of these big sharks will bid in and share their insights. And there are also a bunch of guys who are newer to trading supply and demand, currency strength, and there are guys that are trading demo, and others who are kind of within the retail space like myself, who are just trading either smaller or larger accounts for themselves. So it's a very exciting environment, so I really encourage all of you to get involved. And if there's something that you would like to see discussed in a symposium, then let me know about it by posting a request here, okay? If there's a guest that you would like to see in here, let me know and I'll see if I can try and get it organized. My old mentor, who's become a good friend, was recently in Copenhagen, and so I went out to the airport and we had a brew and a chit chat. Chris Laurie, I think many of you guys will probably know his name. He's a really interesting guy, and he's got a hedge fund in Singapore, and he's trading like millions and millions and millions of dollars, and he's a really exciting guy. And so if you guys would like to hear from him, I'm sure I could get him in here as well. He has a lot of interesting insights into the retail and the institutional FX space based on his background, and so he would be a perfect guest here. So maybe I can get that organized as well. I'd like to do more of that kind of stuff instead of it always being me kind of jabbering about various things. Okay, so get in here, get active, and let's try and get some interesting topics going. Okay, and then we have EmptyFive. Here, well, I have started writing the Pipnotic software for EmptyFive, and that will be available. I don't want to give a date, but I'll say when I'm finished writing it. and it's an exciting process. I think that the new product will be really good. It'll be more efficient. It'll be faster than the MT4 version. This has a lot to do with the efficiency of the EmptyFive platform. It's just written a little bit more efficiently than the MT4, and also the bridge is different, and so it enables EmptyFive brokers to interact directly with liquidity brokers, and so they can of course display price feeds from loads of different instruments as a result. So it's a very interesting platform, and so eventually I'd like to get this introduced. It will happen before too long, I'm hoping, but I still have a ton of code to write, so please be patient. And the price will be the same. It'll be within the whole thing. So if you're currently a member, you'll get EmptyFive version for free, of course. So there's no additional charge for that. It'll just be like a bundled solution, Pipnotic software on MT4 and EmptyFive platforms as one software offering. Okay. Commodities. Well, which commodities do we have to work with? Well, there are a load of different commodities, and I'm not an economist, and I don't really know or understand what goes on behind the scenes, but I do know that Canada is the third largest producer of oil, and so obviously the prices of oil are going to affect the price of the Canadian dollar, which will in turn be reflected in currencies that are traded against the Canadian dollar. The same applies for Japan, who buys almost all of their natural resources because they have nothing themselves. So natural gas, oil, these are commodities that Japan needs to buy. And of course, if Canadian dollar is really expensive, well, this is perhaps going to be expensive for Japan and have a negative impact on the Japanese yen. Then we have gold, which is mined in Australia. Good gold prices will cause the Australian dollar to appreciate. And then we have milk prices in New Zealand. Okay, so there are a lot of things going on. So it's just generally a good idea to know what's going on if you are trading these commodity currencies. So if we have a look at the correlations with oil, so I mean, Canada, as I mentioned, is the third largest producer of oil. I suppose they're not producing it; they're just kind of pumping out of the earth. Mother Nature produced it for them. And then we have, of course, as I mentioned, the oil price, which is going to affect obviously the Canadian dollar, but also other countries who are dependent on oil. So we have the US, which I think is the largest importer of oil from Canada. We have Japan, which also imports a lot of oil. And so low oil prices are bad for the Canadian dollar, and they're good for the Japanese yen, or other nations who are importing oil from Canada. Okay. So as we can see here, I mean, Canada sells oil, and among others, Japan buys oil. And so these prices are going to be reflected in the strength of these currencies in relation to others. Then we have gold. So Australia is the second largest producer or miner of gold, and so high gold prices are going to be good for the Australian economy because they are selling gold. Okay, and so high gold prices are going to drive the Australian dollar higher north. So this is I mean, I don't pay a whole lot of attention to this, but it's good to know what's going on. My primary focus is interest rates, and this is important because I mean, high yielding currencies are going to attract liquidity. So if you're getting let's say something crazy, and let's say the American dollar has an interest rate of 4, okay, it'd be pretty foolish to keep liquidity in a currency that is depreciating due to negative interest rates. Obviously, this clever investment would be to move money into the American dollar and hold that, and this will in turn appreciate in value because of the interest rates. Currently, I mean, I live in Indonesia. We bank in Indonesia as well, and we are getting short-term deposits. So I think that they're paying us, if I tie up my money for 3 months, they're paying us 5.5%. That's pretty remarkable. Here in Denmark, we get nothing. In some banks, you even have to pay negative interest, which is a bit of a blow. And so knowing what interest rates are yielding in relations to others is going to be a pretty good idea. And so the Kiwi, the American dollar, the Australian dollar, and these are known to be pretty good yielding currencies for the time being. This will probably change in the US dollar here before the end of the year. But the Australian dollar and the Kiwi dollar, I mean, these are positive yielding currencies. And compare these to negative yielding currencies, such as the Swiss franc or the Japanese yen. And so buying the Aussie franc or the Aussie yen is considered pretty good, or buying the Kiwi, Swiss franc, Japanese yen is good. Just keep this stuff in mind, because this is going to be useful to you, especially if you're holding longer term positions. As I've showed in the past, some of the positions that we were holding, I mean, they were like relatively big positions, and just the interest alone is worth having the position. So you buy a high yielding currency, you sell a lower or negative yielding currency, and even if the price of the security is moving sideways, you're still earning money every day on interest. Okay, so just a good thing to be aware of. Good. Okay, let's have a look at analysis of oil and gold and see how these play out in relation to Canadian dollar, Japanese yen, and the Australian dollar here. So let's have a quick look and go to the charts. So if you see here we have oil. You can see it went down. We had this area of supply here. Price went up to it. We had this little one here. Price had a bit of a bounce here. It consumed it. It went up here. Then it went down. And it went down to the beginning of the buy zone, which is here. Okay, right there. And it went here, and now it's moving higher. If we have a look at the CAD, Japanese yen, you can see that we had kind of, if we go like, let me go like this so it's a little bit clearer here. So daily, 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 good. So you can see it went from a high to a low, and now we're kind of retracing a bit of it. And here we have from a high to a low, and now it's retracing a little bit. So here you can see pretty clearly kind of a similar, or rather a positive correlation between these two. Okay, and so as the price of oil goes up, the Canadian dollar will generally rise, and the Japanese yen will generally go down, because Japan is buying a more expensive commodity and Canada is selling a more expensive commodity, which is good for Canada and bad for the Japanese yen. And so when this is going up, this is also probably going to go up. And oil is probably going to be a bit of a leading a commodity in relation to, for example, the Canadian dollar, Japanese yen. And so keep an eye on this, and when price starts to enter the beginning of a buy or a sell zone, and if you start to see a bit of a reaction there, then you can go to a corresponding price chart, a positively correlated price chart. Then you can wait for price to reach these areas before you get kind of lured into buying or selling that currency. And we have this one here, and this is the American dollar, Canadian dollar, and this is going to be negatively correlated in relation to the price of oil. So when the price of oil is going up, or the price of the American dollar, Canadian dollar is going to go down. Okay, and so these can also be pretty useful, and you can see there's not a super tight correlation between these two. They almost look like one another. We had a push high and then lower. Here we had a push high and then a push lower, and so there's a bit of a disconnect for the time being between these two. Matter of fact, let's go like this so we can see a bit more price. And you can see there's not a whole lot of correlation between them. Still pretty messy. We can see like prices is kind of drifting lower here. Let's see if we can zoom out a little, see more. Yeah, it means kind of drifting lower-ish awkwardly, and here it's drifting higher. Okay, so you can see there's kind of a slight correlation between them for the time being. Okay, but this is just very interesting to pay attention to. Okay, and some guys are very knowledgeable as to what's going on in relation to these commodities when they have like the inventories tallied in Canada, and how this can have a positive or a negative effect in relation to the United States. Because if the storage of oil in America is high, well, that means that they have to buy less from Canada, and so that can be negative for the Canadian dollar and positive for, so as a result of the Canadian dollar moving lower, the American dollar will move higher in contrast to that. So there's some very interesting correlations between these two. Okay, let's have a look at the price of gold, and then we'll have a look at the price of the Australian dollar. Let's close one of these and pull these out like that. Okay, so if we look here we have the price of gold in relation to the American dollar, and here we have the Australian dollar in relation to the American dollar. And these can actually be positively correlated for the most part, because if you consider the price of gold, if it is going up, well then the price, I suppose you could consider the Australian dollar and the price of gold to be very tightly linked. So when gold is going up, well, the Australian dollar should be going up. So these should be positively correlated, which they're not really for the time being. You can see that gold is appreciating in relation to the American dollar, but the Australian dollar in relation to the American dollar, I mean, it was positively correlated until around here, and then gold went up and the Australian dollar continues to move lower. So this could be leading and this lagging. We'll have to wait and see. Let's have a quick look on the bigger time frames and see if we can see what's going on. You can see these are pretty tightly correlated here. I mean, we're kind of range bound for the time being. Now we're challenging these highs here, and up here we are. I mean, here we're really getting into the edge of this sell zone here. We're just at it now, and then we have this nice area of supply above. And currently you can see that, I mean, the Australian dollar, American dollar is kind of slowing down a little bit, and it's moving into a range. And so this could be kind of entering a period of accumulation before it follows drop and moves higher, as we can see the price of gold in relation to the American dollar. But this is not a this is also gold in relation to the American dollar. I don't have a pure gold price chart, so this would be more telling in relation to what the Australian dollar is doing in relation to the American dollar. Because of course, I mean, when you look at a gold American dollar price chart, I mean, you have essentially the strength of these two battling each other that is playing out on a price chart. But when you're looking at a pure commodity price such as gold or silver or whatever, I mean, this is kind of like the index for that, okay? And we don't see that on this chart. So this is not the best symbol for that. So the best thing to do is to pay attention to a pure gold price chart. Okay, so I just dug up a gold chart. This is like the gold futures. You can see here that it's drifting up very nicely, and so the price of gold is moving higher. What should that mean for Australia? Well, it should mean that eventually the Australian dollar is going to follow and continue to move higher from there. So if we have a look at this chart here, you can see it's moving pretty low. Let's have a look here. You can see that we are moving down to these lows. So the beginning of the buy zone down here, we've moved lower and lower. I think we're trying to find some buyers when there aren't any for the time being. This is actually really strange as well, because if you consider all the talk from the Fed talking about interest rate cuts potentially once or two times before the end of the year, I mean, this is counterintuitive, because of course interest rate cuts will have a negative effect on the currency that's experienced these cuts, and so that would drive the price lower, but we're not seeing that. So it's very interesting and at the same time a little bit alarming. So you just have to be a little bit careful. But this is continuing to move lower, and we're entering this area here, this kind of some monthly nested areas of demand. But let's see if we can find some buyers so we can drive price higher. We have this area here which is just below, and this is the edge of some bullish accumulation over to the left here. And so we can see if we can kind of attract some buyers and move higher. But the thing is, if these commodities are not correlated neither positively or negatively with a given currency, well, then you don't have to pay attention to them. You only use them when they are either positively or negatively correlated. Okay, good. Right, let's get to the charts. Cool, so let's have a look at some. I'm going to turn this off. We have to do everything ourselves. Good. So let's have a look at Brent. What's Brent doing? Well, I don't have any data more than that, so we'll go to the weekly. What's it doing? Well, you can see that we had something interesting happen. We had some pretty high prices, and then we had market structure that failed, and price did not even get back to that area there. You can see up here, if we try and identify the beginning of the sell zone, we had one here, price came to it, and above that we have this, oh dearie me, we have This doesn't happen in the EmptyFive version. We have something here where we had the body of this candle is in the range of the previous, and this one is not into this one, and so I mean this one left these two candles and it came back to the 8045 area before it left. So we have that one there. Once price has visited this area, so that means it's done, and so we have this one which is higher, and then after that we have this one here. We had accumulation and then this candle left. Okay, and so essentially we can just mark it off like this. This isn't the area that's interesting to us to sell at. Okay, and what else do we have? Well, we have the beginning of the buy zone is here, and then we have this one down here. So we have, I like the origin of these moves. We have this one here. If you want, you can move it like that, but price will likely move down to where the pullback is, where the slingshot was pulled back to before it moved higher. So this is what we have. And then you have this here, which is interesting, and this is also market structure failing. We have kind of an extreme push. I don't know if you can put a trend line. There aren't any clear swings here. We don't have any dots here, so we shan't bother. But you do have, I mean, this candle here is in the range of this one, not this one, and so there's a lot of kind of probably some gaps going on in here, and so for this area I would consider marking like this. Okay, so this is the area, the 70-50 area where price managed to depart from. This wasn't really a strong move. Here's a strong move, and what did it do? We took out this child. Now we're poking around at this area of apparent demand. Okay, let's look at this closely. We have the candle that left. It went back to where? To the low. So this is where that is. Okay, this is the candle that left. It pulled back to this level after the accumulation before it left. This is where price is returning to. So currently we have this area, the 6100 area that's currently holding, and our price is figuring out what it wants to do. Okay, so we'll stay on one chart and then we'll go down to the daily and have a look. And what do we have here? Well, here we have, so we have this, which is pretty interesting, how price gapped up, accumulated. We had the lows getting higher, then it broke away. Price revisiting this, and we do actually have market structure failing. Let me zoom in. We go from here to here, the beginning of the sell zone. It's kind of here. Whoa, where did that disappear to? I just mark it off with the rectangle we have here. Like this, because this is a candle that left. We have another one that left, so we'll probably see a reaction here. There we are. And then this is a candle that left. It'll probably have a bit of a test at the highs there, so you could go like this. Let's move double the size. So we have that there. Okay, because this is essentially, I mean, this area here caused the trend line to break. Okay, so this is the candle that actually this is the one here that caused the violation of the trend line. The origin of that move was here. Okay, we had the accumulation. This candle left this area of accumulation, and this is the beginning of the sell zone for that area, the area that caused market structure to fail. And now it looks like we kind of found some buyers. And if you look here, I mean, price went all the way down to this. We had the whole area. Let's just mark the whole area off like that. Where did price go to? It went back to the low just here of this accumulation. So price kind of moved sideways, had an accumulation, then price broke away. And so the low of the accumulation is here. Okay, so this is what price is currently sitting on. Go on. So it looks like we might see price try to wriggle a little bit higher. So we had this weekly area which was tested. We had a area of daily demand which was formed. Okay, we had also had market structure fail. The area that caused that is something in here. It's very messy on this time frame. This is where price is reacting for the time being. And so currently on the daily chart, we don't have a downtrend, we just have a break from the uptrend. So we had higher highs and higher lows until this happened, and now we don't really have any clear swing highs to drive price lower. So we had our uptrend, and now we're having a bit of a break, potentially trying to attract some or advertise a lower price to get some buyers on board that'll drive price higher. Okay, and I really like the edge of this area because price kind of cut away. We pulled the slingshot back here, and this is where that really nice move left from. So this would be an interesting area to watch, the 70-50 area, once price gets back up there. And so here, what do we have? Let me remove all these buy zones, sell zones. We have this really nice push away, which I like. I like that a lot. And so, but if you look at this, I mean, price has already been back to this area here, a little bit higher here. So what I like to do is I like to mark off the high, then scroll back and see where price actually came to. And it came to here. Okay, so price has already been back to this level, and essentially this is the next level that's above. And so price kind of came back down. We pulled back the slingshot back. It was released, and then it popped down, and this is what we're seeing very clearly here. Here we have kind of the parent, child, and then a drop away. So we have a supply up here somewhere on the edge of this weekly area. So this is where we can expect price to have a bit of a bounce. Try and get the okay. Delete that. Cool. So we have the 70-50 area. That's a bit interesting. And so how do you play this? Well, if you're not trading commodities, well, then you could wait for price to line up with some of these areas, and then go to the Canadian dollar chart, a Japanese yen or American dollar, and then you could look for areas of supply and demand that are lined up roughly at the same time. And this is how you would play it. Then you would trade in line with the Brent strength or weakness on the chart of the currency pairs, keeping in mind that you have to be trading in the right direction, okay, positively or negatively correlated. Okay, so it'll be interesting. Let's have a look at natural gas. This is something I never look at. Wow, natural gas had a bit of a spike there, didn't it? So, just a sec. Okay, back again. There's my son calling. Okay, so what do we have here? Well, what we do have is we have market structure failing, low. We have a low, high, low, high. We have a trend line that we can draw from here to here. Okay, and so if we're looking for the edges of buy or sell zone, we have this really big candle here. Obviously there's a big sell zone here because this candle closed below this one and price pushed away forcefully. We have this one here as well, so there's something going on up here which we can't see on this time frame. Then there's nothing but accumulation here, but what we do have this down here. Okay, price is yet to come to the 194.40. This is a pretty decent area. Just looking at this here. Okay, we do have market structure failing, so be a little bit careful buying, but you are on the monthly chart, so anything can happen. Let's zoom out a little bit. What do we have? Well, we have this area of weekly demand that is being tested. It's being beaten on. And a little bit lower, you can see here the area that we talked about, and you can see that we can refine it just a little bit and put it like this. This is probably where I would look to engage in this a little bit deeper into the area, the 185.70 area, and that's because, well, here price went up, we accumulated, and then we left. Okay, so this is like we have a lot of children here, and here we have the parent. Okay, above price, well, ooh, I like this one's really interesting because it's just like a really price left and then we gapped away. So this is tremendously powerful, this one here. And then you can see here there's a lot more clarity on this time frame, but you can see all these gaps and these like slightly illiquid commodities. Let's go here and have a look, and then we can see here, you can see it's a lot clearer. We have a nice daily area here, and we had this area of demand which was consumed by this supply. So this is interesting. Okay, and so I mean, this is essentially we're just looking for the edge of buy and sell zones, and so focusing on the big time frames, you mark these off, and you can use the same chart, and then you can just go down to the smaller time frames. Okay, so you have a directional bias from the big time frame, which for the time being is, well, be careful buying because we're in weekly demand. Does that mean you can't? Doesn't mean you can't. It just means that when we have interest rate swaps between, this is due to the American dollar, that we're going to get some interest every day, every time for every day we hold this position long. Okay, and so now because of this we have a directional bias, like a long-term flow of liquidity to buy this, a directional bias to buy. Okay, so price is poking in this area. We saw one rejection. Price is looking a little bit deeper, so we're trying to advertise some low prices to pull some buyers out of the bushes, but we haven't really seen that yet. Okay, so what we want to see is we have like market structure here. We have this trend line that's being respected, so market structure is still intact. We have a downtrend. We want to see this being broken, and then we buy the area of demand that caused market structure to fail. I'm thinking we'll probably go to the lows, maybe to the low of this one here, just beyond this one here, or just, let's have a look here in the smaller time frames. We can see, so here, so we have this. This is interesting. So price is kind of flirting with this low here, the 220 area. So this might see some buying, but I don't like the fact that price kind of came down and went up and then it came down pretty quickly. So I'd like to see price come in this area and then have some rejection to the upside before I started to look to buy, or just look left. So if we do that and we scroll, which I feel more inclined to do, so now we scroll left and we look for demand, we can see it here. So yeah, so we have, well, you see we have this push away, and then we have kind of a lot of kind of testing in here. So well, you'd certainly want to maybe look below that, and I think we have here, I mean this candle here is the one that pushed and managed to hold away. Then price has already been back to this here, so it's not a very clean area here, so just wait for just like clearer patterns to emerge on the chart, which we don't really see at this time. Okay, let's have a look at, let's have a look at the Ripple. What's going on here? Well, monthly, I mean, look at that parabolic. Look here, I mean, we had like these lows, price went up, accumulated, we went to the moon, we came back from the moon back to Earth, and now we're kind of sitting around this area, and you can see this is a lot of kind of like white candles accumulating orders to go to drive price higher north. I don't know what's going on. We'll have to wait and see. Let's have a look if we can see anything here. We see here the slingshot was pulled back to here. Haven't really been down there. I mean, this is, if price managed to come back down to this area here, this is pretty much at the beginning. You can see like the lows. Price came back to the here, like to about 10 cents. I mean, there'd be a lot of people looking to buy there, because this is price rallied. We moved sideways. I mean, we managed to come, the lows so far have been right around here, which is the 12.5 cent, almost 13 cents. Then price just went completely north. So if price comes down here, you will see an enormous amount of speculation stepping in, because that's a very attractive price for XRP, because there is so much speculation about the popularity of XRP, and it is certainly a technology that's being very quickly and very widely embraced in the established monetary space, but also the speculative crypto space. Okay, so I mean, MoneyGram is starting to use it. There are loads and loads of banks that are starting to use XRP for liquidity, for real-time international settlements. So this is a technology that's certainly here to stay. So I mean, I bought about close to 10,000 of these a long time ago when it was down at around maybe 10 cents. I got in like just around here on this on the first pullback here, or maybe even around here. And I'm I mean, I'm looking to hold these for 3 to 5 years, and I'm about 1.5 years into this, and so I'm expecting this to go to keep going north. Okay. Let's have a look at Bitcoin. Bitcoin's doing all sorts of stuff. We had price sitting around here for a long time. We had a big spike in interest, advertised a very expensive price. Well, expensive, you'd say that, wouldn't you? $1,000. Wouldn't you give anything to get a Bitcoin for $1,000? And now price, a lot of people probably taking profits at that stage. Oops. Thinking, oh my goodness, and I earned tons of money. So a lot of profit taking, and then price coming back to those original prices. And then you can see this, I mean, accumulation of positions to drive price to the moon, and it went absolutely roaring north. Okay, and this is still early days. I mean, we're only 7 or 8 years kind of into this, you know, and so I mean, who knows what's going to happen? But like, for the time being, it's still an attractive asset. But here we have, I mean, we don't really have any closes. I mean, we had this, like how, I mean, this is messy because we had a lot of gaps. Price movement. I mean, this body is in the range of the previous, so it's pretty messy here. Lots of gapping. This came down. We managed to move away. The slingshot was pulled back to this level. It was tested. Now price is looking to move higher. Okay, and so we have this. We have this here. This is really ugly. Oh, it's terrible. It's very difficult to put a handle on anything. But we have kind of this really sharp move higher, and the slingshot was pulled back to the 74.13 area. So if price comes back down to this area, obviously this will be an interesting place to re-engage or accumulate some longer term long positions here. So it's pretty interesting, but it's kind of all over the place. It's such a volatile instrument. It's really difficult to get your hands on. And if you're using tight stops in a market like this, you're probably getting stopped out all the time. So you're going to have to use some really wide stops to allow the volatility of this to work out, to play out. Okay, cool. Let's have a look at Canadian dollar. What's going on here? Well, we have some important things going on. We have high, low, lower, low. But notice we had the low of the accumulation, beginning of the buy zone is here. Price tested it already. Now we're moving higher. Now we've poked into this area here, and now we're kind of, looks like we're pushing a little bit lower. You can see we have a high, a low, a lower high, and a lower low, and so we can expect the price will maybe try to drift low. We have had market structure fail, and put it like that. I'm going to turn off these, so we have to do the work ourselves. Cool. Okay, and so you can ask yourself, what area of supply caused this market structure to fail? We can't really see it here, but you can have a look, and there's something at the highs here, so there's certainly something there. You see the test back up into here, the slingshot was pulled back and then it dumped south. Go to the daily chart. Before we do that, let's identify the area of buy zone. This one's been met, and then we have this one which has been met here, and so we probably have something. I mean, price has already been back to here, so we probably have something here. It's going to go like that. This is roughly where we have at the 124.50 area, but be careful buying, because we are starting to move. Be careful buying unless you're getting in at a price all the way down here. This is a very low price for this. Okay, but we can see that market structure is fair. We go to the daily chart. Let's have a look and see what's causing that. You can see here that I mean, this whole thing is standing on this price leg here. Okay, and the origin of this whole thing is actually here. It's this one right here. So if we zoom out a lot, this whole thing is standing on on this price move here. This is started here, okay? So this is the origin of this move. Okay, this is the new origin of this shorter move. Okay, and so I don't know if price is going to get all the way back down here anytime soon, but certainly we can expect price to maybe drift a little bit lower until we see some really interesting patterns. And you can see that price has already been down here. It's already been down here, and so I mean, these kind of like levels on top of levels. And so what I do like is, and I think we'll probably, if you go like this, this could be interesting. Price went up there, the slingshot was pulled back, and then it left. So if we can get price above that, that's a pretty high price, and so I think we'll see some selling at that stage. But shorter term, you can do whatever you like. I mean, price is doing all sorts of stuff. Here we're forming a really nice base here. We're having this kind of this really round ball bottom, and so we're seeing price being advertised at lower prices, lower price, we're buying, lower price, we're buying, we're accumulating, and then price is shooting north now. And so we had some buying interest from this area. So let's have a look, see what's there. You can see how, yeah, I mean, we had price pushed down and then rejected, and then slingshot was pulled back, but we had that here as well, and then here. And so this is more interesting, how price kind of went up, accumulated, flew north, and then came down and then left. Price has not been back here, so you might want to look from here to here. Okay, let's zoom out now and see what that is. This looks pretty interesting from this area here. Okay, but you want your stop below here, because this is a pretty big move if you want to kind of set this and walk away from it. But we do have a nice continuation pattern in here. Price tested it and went north. You can see the slingshot has been pulled back. The edge of the buy zone is here because we have the origin of this. This whole move is standing on this. Okay, and this is the first slingshot since the origin was established. So I'd certainly be looking for the 128 or at the 129-ish 100 area, and plus minus 10 or 20 pips. And yeah, we'll have to see. Currently we're kind of nestling around at this area here, but price has already been back there, so keep that in mind. Cool. Well, I think we're almost running 3/4 of an hour, so I'll wrap it up at that. But if you have any questions about the material we covered today, please let me know. I didn't go into any great detail about the commodity correlation. If you want me to, we can dive a lot deeper, but I just kind of wanted to scratch the surface, and maybe this information is newer for some of you. Matt requested this topic, but as I mentioned, we didn't go very deep, but we can certainly go even deeper. Okay, it's your call entirely, but have a look. Have any questions, send them in. You have any comments, put them in the forum, and I'll catch you all next time. Thanks.